Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, January 10th. We're just getting the release of import prices here for the month of December, a little softer than expected on the dollar, or for the US rather. Year on year coming in at 3% versus 3.1 expected, month on month even softer at just 0.1%. Not expected to be a major market mover. As far as event risk for today, guys, you do have Evan speaking right at 9 o'clock. So shortly, or in the midst of this webinar, we'll give you highlights on that. Kaplan will be speaking also later at that time. The most important thing today I'll be watching is crude inventories. Prices have just been ripping since last night. And I highlighted that region that we were at last night as sort of a precarious region. We're still there now. Crude holding just above near-term resistance. Any long exposure that you'd have, again, my humble opinion, I'm kind of out here. I do think it's vulnerable. The next topside target could be a stretch still before it reverses. We'll come to crude in a minute. I'm really excited about it, so I'll come back to that in a moment. But on the menu for today, we'll take a look at the DXY. It made a big reversal off that resistance that we were highlighting yesterday. We'll take a look at Sterling Key. It's got stopped out at break even on the rest of that trade, guys. I told you those levels last night. Got a nice quarter of a position off at 70 pips plus, but that tumbled pretty quick as the sterling kind of fell out of bed there. But Euro Aus, that reversal pivot actually worked out a little better. You're seeing that Euro and Aussie versus the dollar are stronger today. Euro way outpacing those gains. So you're seeing Euro Aussie with a nice rebound off that pivot that we've been tracking. Obviously, we'll take a look at crude prices. We'll hit Euro real quick. We'll hit Aussie. Kiwi, I don't really have a trade on. The weekly, we'll take a look at the Kiwi charts. There's still room, in my opinion. It's kind of, if it was going to make a pullback, this is kind of the region where it should have done it. So I'm not really sure what to do with Kiwi, but we'll take a look at that. And obviously the yen crosses. So you did see the BOJ yesterday, all this talk, their easing is not quite as much anymore. You're seeing the yen with some strength across the board. Dollar yen tumbled, euro yen reversal. I don't know if Pooja's in the room today, but she was talking about that euro yen yesterday. That's still continuing to move lower. Pound yen breaking structural support. And I think on the pound side, for the short side of the pound, if there's going to be a move, pound yen is certainly a big, big candidate. So lots to cover. As always, if you have any questions or trade setups you guys want to review, or any questions in general, feel free to throw them on the message board at any time. All right, so dollar. This is what we looked like yesterday. The thing with the dollar is it's at near-term resistance. Let me go back to that chart. Yesterday we were highlighting this. We're at near-term resistance, and it was basically the underbelly of this 618 retracement. The reason it's still convenient or a resistance level you want to watch is because it also defines these stretch lows and these stretch highs. So it's been a natural pivot in price. So I was expecting a pullback, not quite that pullback to cover the entire monthly range, which is almost what we're doing here. So for the dollar index, this is a very well-defined at this point monthly opening range. Yeah, at least if this was the break of the monthly opening range we initially anticipated, that reversal covering the entire range again puts the emphasis on 91, 92.60, the same level that we came into the year talking about. So this is still the range break that we need to see defined. Remember, the analog does call for the start of the month to give us some sideways to higher before resumption lower, and that's exactly what we've gotten. Now, I don't necessarily think we get the break quite here on this run, but just know that this is the well-defined range here for the dollar index. The short-term structure that we were talking about yesterday has already broken. So remember, I was saying a little too early to rely heavily specifically on this near-term structure, just because it really hadn't given us any pivots just yet. But it highlighted that swing low that came in at 92.08, right about the handle, and right now kind of breaking right back below that. If initial resistance holds here, yeah, the emphasis is on the break of the lows. But as it stands right now, I'm not front running a break of that range until we finally make it. This is pretty big. So for the dollar index, steady as she goes, I guess. Same range, not really much to look at. As far as the weekly structure, pretty much unchanged at this point. We're right back at the open. So just keep your eye on the big picture. The broader picture still remains constructive. We were looking for a rebound. This one's been really short-lived. Again, it's really tough to call this a break and just move lower from here still. So, my focus is going to be whether we clear this 91.90, 92.60 range and what direction that happens. The idea was if we get a pullback to get the play into these targets, and this is where we look to take a little bit more of an affirmative short. Lots up there, right? But look, the market's going to do what it's going to do. So if it breaks this range to the downside, 91.33, 91 are your initial targets on the index. Okay, really iffy here. So I'm kind of going to go neutral stance here on the index until we get through this range. Kind of puts a knot in the dollar crosses, which is why you've seen most of the updates on the intraday page mostly recently have been either commodity related or the crosses. And I think that's where I've been getting most of my juice, at least this week. Things have just been really slow. Things exploding today, but ahead of that, it's kind of like grinding gears. Here's what Kiwi or sterling Kiwi looked like yesterday. Was pretty encouraged on the initial approach. We talked about this we've been tracking this one for a couple of days. If we go to the previous update, you can see the daily charts. Remember, guys, the daily charts are never more than one click away. So if you don't see the daily chart presented on that update, the previous one will always have it. So, big support region. You had the 200-day moving, you had the 100-day, moving average, slope support. And if you were going to get some sort of near-term pivot, momentum was still basically holding 40. So the break below now kind of changes everything. Here's what pound Kiwi looks like. Oops. Oh, by the way, Euro Kiwi also at a huge level, but we'll come to that if we have time later. Pound Kiwi's right here. So here's what's happening now, okay? This is where you need to sit on your hands. If you were in that trade with me and you're out, we don't do anything here. We still could be right. This still could recover, close above this region, and start to mount an assault. But this outside candle here, and it is considered an outside day reversal. Yesterday was basically a doji, but we closed fractionally higher. So an outside reversal at the lows. I've always told you this. This could be an exhaustion trade too. I don't know. The recovery for me would be 188.80. Same region that we were looking at. If we recover back above that, I would get more encouraged that maybe another low is in place. But at this point, you're not doing anything. We're not doing anything. The play was the rebound. We were looking for the pivot in this and Euro Aussie. Like I said, Euro Aussie panned out a lot better. On this one, the pivot did give us 70 pips. Like I said yesterday, took half quarter of the trade off. Another half of the trade was set for a limit at 89.84. This thing turned right at 89.56, and we just plummeted ever since. So we got taken out break even on the rest of that. From here, like I said, if we mount 88 again, 88.80, I get encouraged. Beyond that, your pound Kiwi is at risk for some serious drawdown here. Remember, the downside break of a descending formation. This could be sharp. So putting this one on notice. We were playing counter trend. We noted that from the start. That being said, this slide below support here really risks some real sharp declines, especially if we close beyond the confluence. This is what you need to look for today. 100-day moving average, slope support. If we close below this, keep looking lower. Keep looking lower. That would be the go ahead. Euro Aus, this will be number 3. Euro Aus was a little cleaner. And this one's continued to mount pace a little bit better. So the big key, I'm going to make up words all day, guys. The big key region here was 52.26. That's a level we've been looking at for a while. It's the former swing highs but from back here in May of last year. But you also had the 100-day moving average and almost the same exact setup that we were just looking at with pound key as well. So here's Euro Aus, lower parallel, same highs from last year. Right there as well. So this one panned out a little bit better. Same type of momentum signature, getting really tired there at around 40 on the downside, looking to play the recovery. So the long here is still in play. You're still looking for a tag of former trendline support, basic trendline support. Not going to get crazy on this because it's only a 2-point touch, but that would still give us a little bit more room up near 53 and change. Here's what it looks like on the intraday. Whoops, don't want to do that. And it's a closer, cleaner picture here. Even on the momentum signature, you did have some decent triggers here. There's a 3-point touch. 1, 2, 3. There's the break. So initial target still 53.40 is the weekly opening range high. Like I said, the weekly open was already kind of just ran through that just now. So as we get into the 53 handle, which we're testing now, this is a region of, you might see some near-term exhaustion, but this is the breakout. Move above this would be an objective weekly opening range. Certainly would shift our focus towards a Thursday, Friday high. But first things first, right now the rebound's in play. Better than pound Kiwi, this one's treating us going towards 53 and 53.40. Still want to recognize that this is still counter trend, just as pound Kiwi was last night. Same thing, okay? So you want to be trading half leverage. Your stop should be at break even or better now. And we want to look for that reaction near 53.40 to clear the pathway rather for a larger advance higher. Any questions on Euro Aussie? Here's Euro Aussie on the weekly. So we're playing this little bounce here. Don't get too cocky or confident on this one. Just like the pound Kiwi, again, very, very light on it, but so far so good. Okay, so that is Euro Aus. No change to any of those levels. So we've simply sunk into that region. You made the bounce. And again, you're looking for that initial approach on 53.40. Pound Kiwi we covered. Crude. Here's crude. So here, I mean, we've been following this one obviously since last year, but the breakout levels that we were looking for, 62.56, 63.23, for me was pretty big. Okay, for me was pretty big. Basic channel resistance. This is the measured move. Okay, the 100% extension of basic triangle breakout. So inherently, that was the target. Now we've broken above it, and it's sort of acting as near-term support, but I caution anyone trying to chase the long from here. Here's what crude looked like last night. Okay, we were right in this, and then again, 63.44, we were just sitting right there. We're kind of holding that region now. Here's crude prices as we stand, still at that same exact level. Okay, and today's close is going to be paramount. Same thing as the pound Kiwi. I want to see where that close happens. Just because we broke here, technically from a technical basis, if we close the daily candle here, you want to look for 64.78. That's the next target. But for me, any long exposure is out. I wouldn't tempt a short yet. You're still in overbought conditions on multiple time frames, daily and intraday. Even if you bring this to 120, it's still an overbought. So, we could get an exhaustion trade here, which was the idea. If you go back to the update from a couple of days ago, these are regions that if reached, or both levels for interest for near-term exhaustion. So, hey, Peter says, sorry, I'm late. No worries, man. Great to see you in the room. So I'm not really, going to advocate necessarily trying to chase a short, but just recognize that, this is an area of interest for exhaustion. If we're going to get an exhaustion pullback, a daily close below this would be the onset of such a scenario. All things held constant, we close here or even higher. 64.78 is the next upside target. Okay. So the focus, everything right now is right on here, whether we close above 63.23 or not. Again, showing you the near-term chart here, just zooming this out a little bit. Real basic stuff. Basic channel support. A parallel to the high saw 3 tags, confirmed resistance, and that converged on that measured move of the triangle breakout. So this is still, big region for me. As I said, you do get crude inventories just shortly after the conclusion of this webinar at 10:30 Eastern, so it could give us a little bit more of a kickback. Even if you get an exhaustion push and it closed below, that's a scenario. I'm cool with actually looking to play actually. So if you were to get some sort of unforeseen build on inventory and you get a spike in 64.78, that'd be great, especially if we end up closing the day below 63.20. It's a big ask. They might be dreaming, but that's a scenario of which I'd be interested in the short. Likewise, if we close below, stops against that high to play a near-term pullback, might be a near-term play as well. Any questions on crude prices? More headlines this gets, the closer we should be looking for that pullback. Okay, so I guess let's jump into the dollar crosses real quick. I'm not a real big fan of how they're playing out. Euro dollar, Jamie's looking for short entries near 120. I do think that that's There's lots of validity to that claim, and I do think the near-term structure still leaves a little bit more room for an advance, but the 20 entries there. 120.34 is the near-term bearish invalidation that I had noted earlier. So as long as we stay below this, the downside kind of is still the play for the euro. But I get concerned. I get concerned when I see the DXY plummeting near that support target, and if it gives way, look for that pivot to mark what we should be looking to do on these. Okay, and this is also encouraging the recovery. If we make it through this is already void, guys, null and void. So don't kind of pay no mind to that at this point. But if we get some sort of slope to play with, it would certainly give us a little bit more conviction. As far as the euro is concerned, you're still testing, or you're still within the confines, rather, of this near-term descending formation. Let me show you this on the whole. So I guess we should do some housekeeping here. Euro dollar, a couple things that we talked about for those of you who were with me on the Monday webinar and yesterday. 1947, that was my line in the sand. And if we close below that, I was going to continue to favor the downside. Well, here's a classic scenario of when you're wrong pretty quick. Market literally on the next approach couldn't even make an attempt at the lows before seeing this pop higher here. So what do we do at this point? Let's clean this up. The 786 retracement, obviously, at this point is going to be kind of a moot point. So we're going to get rid of that. Range becomes contracted. I'd look for the close highs here to give us the support. Kind of seen that play here. And it narrows the range from 1930 to 1947. This spot right here, near-term support. And that's still kind of the breakdown zone I want to see. Sometimes you need to adjust your levels. Hey, stuff happens, okay? Bring this into a line chart. You can see that even from a closed basis, markets don't want to work in a vacuum. The close was 1936. My level was 1947. So you can see how a 10 pip zone, even as much conviction as you might have on it, could just simply be refuted with near-term price action. So just kind of want to show you the bigger picture and how, even though this didn't quite play out the way I wanted it to, finding resistance near the monthly open, sure. Last month's highs, still at 2026. Like I said, the near-term picture, still 2034. I wouldn't even be surprised. High day close from last year. That being said, you're still in the near-term downtrend. Okay. Couple things. A, we got the divergence that we were talking about, and that actually materialized here with this downside play. But that's that. The one thing I want to note is this: if this decline here on the 8th was a break of the objective monthly opening range, we'd basically still want to stay bearish as long as the daily close is below that level. So there's a couple of things that are all working together here to suggest, yeah, let's look for that, kind of jackknife lower from here, especially if we're able to hold resistance today, basically sub 2030. Questions on euro dollar? Okay, looking for exhaustion on this pull higher, looking for a move lower on the near-term picture. Aussie, here's what Aussie looks like. It's a clean rebound off support. No one should be surprised. This was the breakdown zone that we were looking to kind of charge a bigger decline. I think Jamie's on this one as well. He's looking for the last sort of stretch high to complete the 5-wave scenario here, and I think would be a really nice play if it finally tagged this region. Do you remember about this level, guys? We were talking about it earlier in the week. This is where we originally wanted to get on the short side of this trade. 78.86 into 78.97 is basically the swing highs that he made back there in October, and the key 618 retracement of last year's entire range, the decline off last year's high. So you had slope resistance up there too. It was just kind of a nice spot. So we were looking for the start of the year for that to be sort of the kind of the monthly opening range high, sort of a range play break, if you will, with if we break the upside, great, all the fuel and the fire that you need. At the same respect, the downside break, well, we'd look to play the correction for a reset back on the long side. Long term, as we've continued to track, Aussie's coming off of a huge level last year. Don't forget this. So time for a little bit of an interruption. 200-week long-term moving average? Sure. Daily chart turned right ahead of resistance. Wouldn't be surprised if Jamie's 5-wave scenario type plays out. That last stab into this region would still be a nice opportunity, I think, for a near-term move lower. On the decline, this is the support, this was the target, this was the last level that we needed to break for the bullish inval. The fact that it's held and give us a pop, you basically want to see the weekly opening range hold as resistance. I would let this thing even float into 78.86. I'd look for entry there. So for me, just to put this on the table, for me, again, my humble opinion from this point, if you're not holding exposure on this, it's either a stab into 78.86, 78.97 for entry, or if we break below this, you'd look to sell rebounds below 78, charging 77.60. And this nice little confluence zone there. Any questions on Aussie? Pooja says, hey, Mike, sorry I got here late. You and Peter both today, huh? She says, you're Aussie also, please. I closed out longs near 53. Okay. Would you consider reentry? If yes, where? So I was thinking about you yesterday, Pooja. I briefly noted it. We'll go over the Euro cross in a moment. I'm sorry, you're talking about Euro Oz. Yeah. We just covered Euro Oz. So let me just bring it back for you real quick. Guys in the room, bear with me 1 second. I know Pooja's covering this one or following this one closely. I thought you were talking about Euro Yen, Pooja. Yeah, Euro Oz still looks good. Like I said, I was telling these guys 53 maybe, a little bit off. Shave, it's a big, it's just a big figure. You could be some kickback. It's 53.40 be an objective weekly opening range break. If you closed out your longs, where would you consider re-entry? Okay, so for a re-entry on this one, Pooja, where'd you close out your long? Why'd you get shaken out of that? Let's drill down. So here's what I'd say. I mean, you'd want to get as close to 52.50 again, Pooja, in my humble opinion. The top of that support zone that we've been looking at since the start of the week. That puts a stop against the swing low. Essentially, if we break today's swing low, I'd be at break even already, or I am at break even already. But if we break today's swing low, that's basically your line in the sand. So this and pound Kiwi were both precarious pivot trades, counter trend. I still think you need to keep it that way, Pooja. So for re-entry on the long side, one thing I would just say, just kind of as on the side, just wanted to kick that out. I put re-entry at 52.50, 52.70. This is 20 pip zone right here. Just because if we give, this is just a pivot sort of along the lower parallel, you could come back and tag it again and push higher. So first area of zone, I'd be looking for initial support. If beyond that, Pooja, forget it. If it breaks 52.20, it's out. This thing's done. But no change to any of the levels from the update. Okay, so 53 is just a soft target here, but 53.40, that's sort of the break that would validate the larger reversal. Does that make sense, Pooja? Okay, thanks. I guess counter trend was what shook me out, I guess. Yeah, I don't blame you. But even when you are trading counter trend, the best way is kind of chip out off it, because if it does end up being a decent low, and the prime example of that I have for all of you, and I'm sure all of you remember from last year, was the Aussie reversal. We were basically long off of 75, and I thought the 76.30 was an awesome level, and once we got out, we had an opportunity to get in, didn't take it again, kind of missed the bigger part of the rally. So this is, had we left a little bit on, it would have drifted and given us at least a little bit of a traction on that. So for Euro Oz, I don't blame you. I don't blame you. 53 is kind of the level of which you want to shave off at least half of the position. Stop us at break even, 53.40 next target. But the momentum signature looks pretty decent. Okay, for everyone in the room, thanks for reviewing that and entertaining that for Pooja, so we can go through that one more time. Euro, we covered Aussie with a bounce here off support, Kiwi. So as I said early in the session, I really don't know what to do with Kiwi here. And, if you're holding longs, again, this is one of those trades where you just kind of want to choke up your stop, because, from a technical price point, forget momentum. You should be looking for that extension to 72.76. Here's why. You kind of look back in history and kind of when did we see price action, this kind of magnitude advance? And you might look at this and say, well, Mike, this looks like basically a fifth week of advances. Isn't that kind of a stretch? Shouldn't that we be alerted? Well, not necessarily. The last couple of times that we've seen that here in Kiwi dollar has not been that far long ago. Actually, it's happened more than twice over the last year alone. Both of those were even more, 6 weeks and 7 week advance. The 6 week here obviously saw a larger reversal. The 7 week here was just an interruption, and then you ripped for another 3 weeks. So my point being is, look, momentum is not necessarily an overbought. You're not too outstretched here necessarily on the weekly charts. So that key zone, 72.61, just higher, 200-week moving average, 72.80. I guess we could just kind of just mosey on up in there. It might take a while, but he's just not enough conviction here to try to short this, even for a near-term play, and try to buy it, basically at 3-month highs. That's not my game either. So Kiwi, unfortunately for me, is kind of just, you got to just sit and watch the show and see how it pans out. If we get a spike into 72.60, then a pullback, cool, specifically a break of this trend line, yeah, that would be a mark of a nice little recovery, I think. You'd play the correction back towards slope support, former slope resistance. That said, look for this thing to drift higher. Still 72.60 could be around the corner. Any questions on Kiwi? Wish I had a little bit more of a conviction trade for you on this one, but all things held constant, I really don't know what to do unless this thing gets into 72.60 for the short, or makes a firm close back below 71.70. So that's Kiwi. Just an interesting side note there. Now that we've got the dollar out of the way, and like I said, I'm not really a big fan of the dollar crosses right now. I haven't really been messing with them. The juice has been in the crosses. We talked about pound Kiwi. We're looking for the close today to tell us what to do there. Euro Oz with the rebound. Dollar yen, obviously the yen news again from the BOJ overnight. I'm not a big trader of dollar yen. I think there's more clarity in the crosses, which we'll go over in a moment. But just to show you a basic range break of what looks to be some sort of near-term consolidation in dollar yen. Could be a decent play here. So if we were to consider this, basically some sort of near-term recovery play off the low, a measured conservative move of that, oops, what am I doing? Would take you down right here. And that is, lo and behold, I know you can't see here. Let me just change the positioning. That is the 618 retracement. Okay, and that gives you basically 110.15, 110.20. So, play at your own risk. I'm not going to get involved on a chase in the dollar yen per se at this point if you're not already in this. Again, one of those trades where you get the reset back near 112 and it holds resistance, go for it. 111 is just a near-term target. Really, 110.15 is big. 618, the measured move, the consolidation break. And even if this is just a near-term range break, it would still give you sort of a move towards basically that 110.20, 110.15 range. So the implications for this move are big. Also take into account trying to keep things as objective as we can. A triangle break in dollar yen, you can count it on, I'm sorry, is that say Pooja? You can count on it to break in the wrong direction, right? We always talk about these triangle breaks, and everyone's always has differing opinions on. I've seen them break as terminal, and I've seen them break as resumption. That's why I'm always very cautious on how these break. But you're absolutely right. That's why I call it the abomination. It's earned its title with I think with fervor here at this point. So yeah, look, recovery back near 112, like I said, would be an area of interest for initial resistance. On whole, objectively, monthly open, monthly low, monthly high, to break of the monthly opening range. And certainly, if we close below this threshold, not only that would be a conviction break of the monthly opening range, but you also have slope support and the 200-day moving average. So all pretty big stuff. All pretty big stuff if we close below these levels. Okay, soft targets at 110.67, 110.80 over here. But the measured sort of objective run on this would give you 110.15, 110.20. Questions on dollar yen. Eman says, morning, Michael. Can we have a quick update for Kiwi yen? Sure. I have the yen crosses lined up here for last. Kiwi yen. Got you, Eman. And don't forget dollar CAD, Mark says. Yeah, ooh. Well, I don't really have a play there. I let me take that back. It's basically the same exact play that we've been talking about. The close that we made above 112, 123.88 in dollar CAD, Mark, still holds true, man. So all the update for that remains unchanged. So the first level was basic slope resistance. We tagged it, pulled back. We sat there for a little bit of a time in overnight trade before breaking yesterday morning. Here's the push. Failed again. We wanted to stay constructive above 24.15. Turned right ahead of that in overnight trade. And here's the rip higher. This is the 24.89 target. Okay, so $4 CAD. And sorry for the segue here, guys. We'll jump into the yen crosses here in a moment. But just to wrap up the dollar crosses, here's what the dollar CAD update looked like most recently. Okay, boom, boom, boom. We hit the 618. We're basically recovering back above this. Yep. So these levels haven't changed. You're working with the same slope. We just tested the lower parallel and even made a break, false break and recovery through it. Tested it again as support. You're at near-term resistance. Wouldn't get comfortable in this one bit, Mark. Your last upside extension target for me would be 125.30, but I would not be getting all cozy in a long for dollar CAD, at least not yet. At least not yet. It's coming off of a big support. The rebound play was 24.15, 23.88. We got that rebound play. This is your first area of interruption. Okay, next topside break beyond here, 25.30. And again, that would be more of a definitive slope type of move. Surpassing here, you're working with a little bit more of a recovery play. But as it stands, testing near-term resistance. Mark, does that make sense? Any specific here questions on dollar CAD? Let me know. Got it. Thanks. All right, cool. Christopher says, will you please give me your analysis on pound Aussie? Sure. Let me add that to the list. Let me just get through some of the yen crosses here, and we will come right back to it, Chris, I promise. All right. So we looked at dollar yen, looked for the implications of the measured move for the triangle breakout there. Euro yen. This is the one I thought you were talking about earlier, Pooja, and I was thinking about you when we talked about this yesterday. I mean, basically where you turned, it's brilliant. It doesn't get much cleaner than that. 1618 extension from the advance off of the 2000, I guess that's the 2016 lows. Gave you 136.32. Basically, this is all slopes of the same parallel of basic slope support. Extended off the high here. You saw the break, saw pivot. This is getting a little creative, but nonetheless, the gradient follows. And there's a near-term break. And if we had seen there's really nothing to stop 140.99. So nice big old reversal. You don't want to get too excited and try to chase this just yet, but it certainly is coming off of a pretty big region. It's been fighting some insane radical RSI divergence. Momentum has been making higher highs since July in this thing, and price action has been unable to do so. It's a tell. So the exhaustion trade is certainly there, I think, near term in euro yen. Doesn't hurt, certainly, that the yen sort of ripped face last night. So, here's the daily chart before we get any deeper. We talked about this basic slope yesterday. Slope trigger, again, today could prove the break. The one thing I wanted to highlight as a level that might be a little bit more of a caution, if we take this same slope that we've been working with and just take a parallel of it, okay, take a copy and extend it to the lows here, you could see not the cleanest, but one touch, two touch, that would give you like 32.88, basically right below the 33 handle. So, I think there's still further downside to go here on Euro Yen, to put it lightly. Intraday charts look like this. A couple of different ways I'm approaching this one. Here's the 240 minute. This is the one that I showed you yesterday that we were working with, and we kind of highlighted the median line as sort of an area of which both of these targets would be, or areas of which we should be looking for the downside on the move. So you overhit that, and we're acting as resistance here. One other sort of formation, I know this is going to get ugly at home, guys, but just bear with me, is this pitchfork. And again, this is going to get messy. Oops, excuse me, not that pitchfork. What was I looking at earlier? Oh, I'm thinking about a pound yen. Sorry, guys. Yeah, this is not the one. This is from here. I just think that you have to be looking to sell balances. What I was trying to do earlier, and I thought this was the pair I was trying to do it on. I'm trying to get a fix on an entry for a re-entry rather for the move lower. And it hasn't given us enough structure. I can't remember which one I was looking at here. So again, what's that? Basically 133, same thing. Everything shows a little bit more room for the downside still before this thing starts to run into anything crazy. Trying to pinpoint an entry once I can tack on some sort of retracement or extension I'm comfortable with. Just looking at it from a price point standpoint, maybe 34.80s would be an area of interest. At this point, I'm kind of going to ditch this 618 here on the intraday and work with this high. And crosses this zone, basically touches this zone, clear pivot here. I'll work with that right now. That's not the May high day close anymore. But on the lookout for an entry in Euro Yen. Basically 34.80s, 35, the median line, if this is going to be a play, would be the way to get into this. Trying to get into the nitty gritty. I was doing this earlier on a different pair again, like I said. Just trying to see if there's any kind of slope gradient that we can work with. Kind of see 1, 2, 3 touch, but that would just give you the tail end of the recovery. I wouldn't be looking to sell at this near-term resistance. You know what I mean? So if we clear this, that would give us the route, rather, to look for the reentry higher up. This is, it's coming into an area which I don't know if I want to start necessarily selling here at the lows. Plus, you have no risk tolerance here. So if it gets into this region and kicks back on a rebound, maybe you could sell it again, but I'd be very, very cautious. So Euro Yen, longer term picture, the implications pretty big. Objectively, it's a break of the monthly opening range. Like I said, from a slope standpoint, still have room into 133 on the downside. Pooja says a very steep PF on the 1 hour for Euro Yen. Well, I'm in the 30 minutes. So which one are you looking at here? Jan 5th high at 1600. You talking about something like this? I'm not sure how we could get every super long to super, super short. You're talking off that high. That's going to be a real tight. If you modify that, it probably fits just perfectly. I mean, possibly. Again, it's once again to this real nitty gritty stuff. It's tough on this one. Wait for the recovery. We're gonna get a decent pop, and I think, like I said, you get reentry. If we get 134.80, I'm gonna take that clip. 135 would be sort of ideal. If things, in a perfect world. Add to that, once we get conviction of the break of the upside of the near-term channel, a basic retracement is where I start to get all my juice. You guys know where I come from with this. And if you do the 618, guess what? 618 is just above the 35 handle, actually 35.37, even higher. There's the 50 right there. So here, I'll do this. These are like levels of interest here on the breakout for possible reentry. 34.80, 35 is still a big spot for me, just because of the pivot and near-term price that you're seeing objectively. Look at the cursor to the left. It's a pretty decent region. And if the pitchfork that we drew earlier in the week is in play, the 50 line of the buy sector there also converges right there. All right. Beyond here, like I said, 33.25, 33 downside targets on the near term for euro yen. Now, pound yen is making some pretty wicked moves too. Here's what pound yen looks like. Let me take this out. Oh, this is the one with the near term. Now things are starting to cross here. Here's what pound yen looks like on the daily. And this is why this is so precarious here for pound yen. So the 2017 high has basically been a resistance region of which we've not been able to close above. Bring this into a line chart. Doesn't get much cleaner than that. Okay, so a failure to push through last year's highs with any daily closes really put the emphasis on a break of the objective monthly opening range. This looks to be it. Keeps the focus lower, sub 151.83 today, specifically on a close. The slope. What I want to say with this, it's been decent. A parallel off the lows basically puts it right here. So if we were to close at this level, I would get a little concerned that you might be in for a near-term recovery. But, all things held constant, I'm looking lower below the monthly open, basically 152. And you know me, guys, longer term picture, I still think pound is a buy, and generally speaking. But to open up the year, seasonalities are crap for the pound. They're just really seasonally weak in December. And from price action, as we've seen so far from the onset, if things continue here, or specifically if we're able to close below 52, I still think there's further downside here. So, how do you play it? How do you approach it? Well, the near-term picture, this is a similar pitchfork to what we were looking at on euro yen, really sort of using the broader structure and the broader highs that we've been tracking. But a near-term one, here's the one I was looking at earlier. A near-term one here. Not like that. Like this. Highlights two regions, or two things I was looking at when I was adding it this morning. First, sort of this little nestled region just basically at the 150 handle. And it gives you basically median line support. And it's been a decent pivot on this slope, obviously. But the other thing is the bigger target, which is the 618 retracement here. So no matter what slope is in play, if it's this one, which we just eyed, could be the play, or if it's the broader one extending off the actual concerted highs, both of those converge on a basic 618 right here at 49.34. Actually, that needs to be adjusted a little bit higher, 49.53. So I like the target. The question is on reentry. Add the 50 line here for some color. Let's see if we do get some kickback. First place I'd start to look, lo and behold, is another convergence right here. Basically lines up with the 5160, 5170 region, this right here. So an area of which you'd start to look for some resistance on an upside swing, targets on the downside. You still need to be mindful of 50.32, but like I said, this is kind of the big spot for me. Some swing lows, some swing highs, key Fibonacci ratio, and again, no matter which pitch is in play, it's a region that's being highlighted over the next week or so, next 5 days. All right, questions on pound yen. Big ATR. They don't call her the Widowmaker for no reason. So, pick and choose your entries on this one. But all things held constant, it looks like a pretty big move. Today's close will be pretty big. On the onset, on the face, below the monthly open, you basically want to look lower here. A lot of noise pinpointing that the sell-off in dollar today came from China, as reported to halt U.S. Treasury purchases. Obviously, yields have been moving very higher, man. I'm sure you guys have been seeing that. Doesn't that affect selling euro from a high level if it reached? So I'm going to answer your question there in a two-pronged approach, man. First of all, I could care less whether they're attributing it to China, global warming, a solar flare, whatever, right? This kind of, this is happening because of this. Okay, there might be fundamental underlying metrics that actually support that kind of claim, but in price, nothing's changed essentially. You know what I mean, man? Those type of headlines will make sense to me if, for example, dollar broke a major key support barrier, and there's this fundamental shift in the underlying purchases of U.S. Treasuries. Obviously, China being the bigger holder. That's a different type of ball game. But we're playing within the same confines of the range that we've been in all month long. We're simply seeing pullbacks in the dollar crosses off pretty well-defined levels, right? We talked about yesterday, it was right in the heading, that dollar index was at resistance. So, yeah, I'm not going to put too much emphasis on that. And would that limit me from taking a trade just because I think that the China-drawn dollar decline is going to limit euro? No. man, no. I have to stay disciplined to what price action is saying. And price action has no, dollar's coming right back into the low is support. It could hold, it could break. If it breaks, all right, that changes the picture. And yeah, for the euro, that'd be really hard for us to continue to favor a downside call. But all things held constant, you're still within the confines of the downtrend. You're not even at downtrend resistance yet, for that matter. And from the technical standpoint here, there's really nothing to shake us out, per se, man. Does that make sense? We have to always take things sort of in stride. And again, you don't want to take a carte blanche opinion. She says yes to the maximum. Cheers, man. I always say this about anything. You never want to take a carte blanche opinion, especially with the greenback. There's going to be times in price, guys, where obviously dollar rules, and you're going to see dollar price just pushing all the pairs and vice versa. But we want to always remember to take every trade on its own merits. Monthly opening ranges are just panning out. We're just starting to get the development of more maturing, near-term trends. And I think we just have to continue to follow price. We can't really get all, affected by the noise. So I digress. Excuse me. So that's Euro yen and pound yen. Kiwi yen was another request here. So here's what Kiwi yen looks like. I haven't actually checked that out today. So let's see where we're trading. Okay. I would say there's probably some near-term support right about where you are right now. It's 6.8 retracement of the decline off the highs. It's not really the big player here, but it's basically last month's high, right, Pooja? So the December highs of 2017 are basically being tested right here as, as support. That's pretty bearish momentum signature, by the way. Ooh, and an outside reversal candle off the high yesterday. Surprised this didn't grab my attention. All right, that's bearish. You're at support right now, and before we can make any major assumptions, let me tell you the levels I'll be looking at for validation. 80-20, where we are right now, a close below that would be helpful. Specifically, a push and close below the monthly open. If we come back below where we opened the year after a reversal like that, I think a larger recovery, bigger picture here. You're basically turning premature within the confines of a pretty well-defined range over the last couple of years. Interesting pair. The only thing that keeps staring at right here is this outside day reversal on the fact that that was the same day that momentum broke back below 70 in RSI. That's a pretty bearish count. But right now, you're pretty much at estimated support. Let's see if there's any structure to this thing. Kiwi yen. We wrote about that not too long ago here, right? Jamie doesn't follow Kiwi yen as much as I do. Ah, here it is. This is from last month, the 14th. Okay. So this was what we were working with last month. We were constructive above 78. Longer term, bigger target was that 80-20 level. Boom, 80-20, resistance, break, could be near-term support. Interesting. Upslope resistance. Weekly open resistance comes in at 80.97. Actually, it's a little bit higher than that. 80.99. I'd be weary for a rebound here, E-Man, but I would be looking to sell that near term, just within the correction off the highs. It's still a broader uptrend, but I wouldn't jump into a short here. Look at 80.20. Watch for that level to offer something. Next downside, obviously, is straight shot, basically 74 or 79.40. Basic median line support, which hasn't been that clean, but former swing highs, 50% retrace of the range. That'd be pretty good. That'd be pretty good. Does that help? On Kiwi yen. Okay, running into the last couple of minutes of the session here, I had promised dollar CAD for Mark. Actually, we hit that already, right? Dollar CAD. Christopher, you wanted to take a look at Pound Oz. Pound Oz should be an interesting look. Dude, this range is ridiculous. I thought it was gonna. This range, I was looking at this. You guys remember we were actually following this trade on the breakout. The pullback found support at slope resistance, and then this thing fell into a range to the close of the year. And here we are. Wow, still holding that godforsaken range. Goodness. Well, yeah, there's not really much for me here, per se, Christopher. Did you have a specific opinion on this? Let's see the daily chart. Low 72.20. Low is 72.13. So you are having real subtle divergence, and I love those subtle divergent signals with the last two lows that you made here. Slightly lower low, a little bit easier, more visible, higher low here in momentum. Suggests near-term exhaustion on the daily. Look, for me on this trade, just to give you the broader picture here, for me for this trade, I'm constructive above 71, 19, 70, 80. That was the game plan since last year's breakout above that level. That's basically where I want to stand now. 100-day moving averages there. You got the 618 longer term. It's kind of not of a big, it's kind of a moot point now because we've broken those highs, but it's also the open for 2017, which was a clear pivot in price both as resistance and as support on both sides. So that confluence region here is what would really shift my opinion, for a bigger dip towards the lower parallel. Broadly speaking, this is a constructive trade. It has been for quite some time, for a few years at this point. But from here, it's either one last stab here for the long, or if you break the monthly opening range highs, look for 76. You know what I mean? That's kind of the only thing I'd be saying, Christopher, as far as near term here on pound Oz. Let me get deeper in the charts here just for a moment and see if I can find anything. So this is what we were following last week. We broke to the top, checked it as resistance. Then right into the close of the week, we just sat right into that thing. And it ended up being the same exact range as the weekly opening range. So immediate focus would be 72 basically into 73.40 for guidance. But let's see if we can clean this up a tad. I'm going to want that 38.2 for the low here, but let me just see if this retracement holds anything. Now, this is making a big assumption that we just bottomed or made some sort of low. So I just want to see what the 618 would be up here. Okay. Yeah, there's nothing here, man. This is a range pure and simple, Christopher. We'll look for the range break. Forgive 72 on a break for the downside. That would kind of be the level to be looking for on the near-term front, just on the objective weekly, monthly opening range lows and the December low for that matter. So you're at support. You break below support, look for 71.20, 70, 79. That's the last marker. A break below that, and this thing is in for a much, much bigger spill. But that'd be my interpretation on pound Oz right now. I'd be on ideal scenario. I'm looking for some support. Gun to my head. All right, Chris. A quick look at gold, if their time permits. There's always time for gold, Pooja. Here's what's gold doing. So it made a rebound off support today, right? If I'm not mistaken, and we came right back into the highs for the month. Here we are. Yep. And basically 1328, excuse me, is the level of the resistance that we quoted. 764 retracement. Whoops. I'm going to scratch that 618 at this point and the 50. Note the divergence in momentum, Pooja. This is a 120-minute chart. Weekly opening range. Whoops, that's not what I wanted. Weekly opening range lows gives you a little support right around here. And no change on the upside target. 1328. We just missed it. Wow, by how much? Just a couple of cents. All right. Again, for gold, I mean, the broader picture, longer term, is constructive. The whole thing with me in that starting the year, it looked like it's just a little bit vulnerable. Here's momentum now. Finally did make it on a daily close below 70, which leaves things vulnerable. If this stretch today basically almost covers the entire monthly range so far, if this stretch fails here, look for the pullback. 1296 was where it's kind of hoping for an early month pullback to get some sort of entries, but doesn't look like we're going to make the move now. So if we were working with this, for example, near term, that just broke. Yeah, simple range break, same thing. Very similar to, sadly, very similar to the pound dollar trade. The only thing here is I don't have noted on the intraday charts, guys, is the yearly open. So just keep in mind where gold opened the year, which is actually right at 1302. So kind of be an area of interest on gold. Yeah, guys, wait for some of these range plays. I see there's a lot of interest in a lot of these pairs and assets that are kind of really just, they're seeing volatility today, but they're still within the confines of the same range. So wait for some more definitive breaks on these before we make any longer term assumptions. And that puts me over on time as usual. I want to thank everyone who joined me today. I will be on tomorrow, same time, same channel, guys. Again, keep in mind, most of the event risk is actually going to come by way of U.S. heading to the close of the week. We get the CPI figures, consumer price index for inflation, as well as retail sales, which is going to be sort of an initial gauge for fourth quarter GDP, which is what everyone's going to be looking for to really get a more definitive cue on, exactly what the economic backdrop is for the Fed moving into this year. I'll leave it there, and I'll see you guys all tomorrow. Best of luck trading. Cheers.